This is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. Last week, markets rallied about 2%, but most of the rally came on last Friday. In the last few months, if you observe, in the past like maybe 2.5 months, Nifty rallied on 5 trading sessions, more than 300 points. Out of these 5 trading sessions, 4 trading sessions happened on Friday. The Friday is a very trending day for the last 2 to 3 months. So one has to be very careful. Even Friday morning in pre-market, I mentioned that Fridays, you have to be very careful. And look at the last Friday. Many intraday traders have lost heavy amount of money. Right? And I know some people have lost even 2%, 3%, 5% of their capital. So at least, for intraday traders, it's better to avoid trading on Fridays. But positional traders are very happy because, since the beginning of this month, I've been saying that 25,000 to 26,000 is the range. And I've been saying that markets are bullish and any fall towards 25,000 is an opportunity to add more put positions at 25,000, and that is working out very well. Not only that, even the technical analysis has been doing very well this time. If you can remember, I told you Nifty is long when 24,975 was crossed, and then now you see it's a more than 800 point rally. The same thing, last Friday, I mentioned that the Bank Nifty is long when 21,840 is crossed. And now see, within 6-7 trading sessions, Bank Nifty has shot up more than 2,000 points. So markets are very bullish. There is no doubt about it. And in fact, this kind of rally is worrying the analysts. Most of the analysts I met, I talk, so they are very cautious. In fact, I've also been very cautious. So now Nifty 26,000 is just less than 1% away. It can go anytime. If I'm not wrong, once in few months, the highest open interest on the downside or highest open interest on the upside will be taken out to scare the option writers. So since the beginning of this month, 25,000 put and 26,000 call, they both had the highest open interest. They have scared 25,000 put. In between the market went to 24,800. And now, who knows? They may scare the people who are selling the call option at 26,000. But we still have 4 more trading sessions. Now, particularly this time, one big change, until last week, or we can say before the Fed rate cut, the defenses were doing well. IT was doing well, FMCG was doing well, and Pharma was doing well. But now, after the Fed rate cut, probably the cyclicals may pick up. So that is what reflected from the Bank Nifty. And shooting up 2,000 points in 6 trading sessions. And then FIIs are pumping in 14,000 crore when the market is at all-time high, when the Bank Nifty hits all-time high. Okay? So that's how FIIs behave. So if you look at this week, the coming week, I do expect Nifty to trade between 25,500 and 26,000. Maybe it's a very small range. The reason is that, in the last 2 weeks, Nifty has already rallied on 2 trading sessions. One trading session about 400 points, another trading session about 300 plus points. So logically, at least for next few trading sessions, Nifty will have to consolidate. So that is the reason why I'm expecting 25,500 on the downside and 26,000 on the high side. And moreover, if you look at the options, 26,000 call options still has the highest open interest. But on the downside, because the rally was so powerful on Friday, even 25,700 put option added huge open interest. So 25,700, 25,600, 25,500, all, but you can't take this as the benchmark probably those people would have sold call options earlier. Say, for example, somebody who has sold 25,800 call option by thinking that will be the resistance. Now market is going to 25,800. So they might be selling more put options aggressively so that, their break even will be better. So otherwise, 25,500 to 26,000 should be the reasonable range for the coming week. Last week of the expiry, so definitely the markets will be very, very volatile. The gamma effect will be kicking in. And, usually, if the markets are very, very volatile, the last week will be even more volatile. So I expect Nifty to move about 250 to 300 points in the next 4 trading sessions. But we don't know whether it is on the upside or downside, or it can be both sides also. So anyway, so let us see. But even if it moves 200 point higher, the time value will help option sellers to make some money. So anyway, so next series is going to be more interesting because it's a 5-week series. And luckily this September is a 4-week series and very, very volatile series. But it was a huge rally because of the US Fed rate cut. So there are no more important news because this is a last week. People will be focusing more on positioning in F&O rather than the data. But US GDP data is there. So, but now because the Fed has already cut the rate 50 basis point and already indicated another 50 basis point cut by the end of this calendar year. So the people may not worry too much about that GDP data also. So here, some manufacturing PMI data, like India is not a data dependent market. So there's nothing to worry much about it. So let us see whether the market consolidates. So my view is that market will consolidate with a positive bias. In case if any intraday fall, that is an opportunity to sell more put options 25,000 and below. Now I feel that even for the month of October, 25,000 should be a support. But there are a few events in October, like, Kashmir and Haryana state elections, there might be some knee-jerk reaction. So that we will see later. So we will pass this expiry first. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.